One of the most overlooked sources of high income available to investors in the stock market would have to be preferred stocks. While they're not covered as often as common stocks, these investments offer some attractive features that make them ideal for certain investors. These investments have a higher dividend priority, can be taxed at a lower level, and are much less volatile, and they can also provide investors with a dividend yield anywhere between 5% on the low end to 10% on the high end. So in today's video, at the request of several people over on our Patreon, we're going to cover the basics of preferred stock, we're going to see how they work, and go over all the benefits they have for investors looking for high distributions. First off, when you think of any individual stock, you're most likely thinking of the common shares of that company. For example, Coca-Cola is KO, Tesla is TSLA, Apple is AAPL, and so on. These are all examples of common stock, which are equity offerings made by companies that basically make you a fractional owner of the company. Common stock has higher long-term growth potential, but also has lower priority for dividends and a lower priority in terms of a payout in the event of a liquidation. But there's also another type of stock that also trades on exchanges in the exact same way, which are preferred stocks. Preferred stock is a type of stock that has characteristics of both stocks and bonds, which kind of makes them like a hybrid investment. Preferred stocks have payouts just like bonds with regular cash distributions and fixed payment terms. Many different types of companies issue preferred stock, including REITs, banks, utilities, and some tech companies as a way of raising additional money. Preferred shareholders have priority over common stock shareholders for payout in a liquidation as well as for receiving dividends. You can see preferred equity holders are one level above common shareholders in the event of a liquidation. If a corporation goes bankrupt and they need to liquidate their assets to pay back their investors, senior debt holders usually get first dibs. It's then followed by subordinated debt holders, hybridizing financial providers, and then preferred equity shareholders. Preferred stocks typically have unusual looking ticker symbols. For example, if you watch this channel on a regular basis, you might be familiar with these ticker symbols. These are the common stock tickers for Annaly Capital, AG&C Investment Corporation, and Oxford Square Capital. But all three of these companies have their own preferred stocks which trade under similar but different ticker symbols. That would include NLY.PF, AGNCP, and OXSQL as some examples. You can buy these holdings just like you normally would using your brokerage platform, and there's pros and cons to being a preferred shareholder if you're seeking income from your portfolio. It's important to know that there are different types of preferred stocks. Some preferred stocks are actually convertible, meaning that you have the option of converting your preferred shares into the common shares of the company should you choose to do so. Most preferred stocks are perpetual, meaning that unlike bonds, they can remain outstanding indefinitely. Bonds, on the other hand, have defined terms, which makes them different from preferred stocks. But preferred stocks come with a handful of benefits that are appealing to income investors. The first important benefit is that preferred shareholders have higher importance when it comes to dividend distributions. Before common shareholders can be paid dividends, preferred shareholders have to be paid first. A good example of this priority would be Annaly Capital. Looking at their dividend distribution history, we can see that for their common stock, they've had about 3 dividend cuts in the last 5 years. But if we look at one of their preferred shares like NLYPG, the shareholders of this stock still got their fixed amount of dividends each quarter, with them paying a little extra in the second quarter of this year. This can make companies like Annaly Capital and AG&C, both of which are common stocks that have seen their dividends decrease over time, still good investments if you hold their preferred shares. A second major benefit to holding preferred shares is tax treatment. Although the dividends received from the preferred shares of REITs, BDCs, and MLPs are taxed as ordinary income, the majority of preferred shares from non-pass-through entities have their dividends taxed as qualified. It can be hard to come across stocks in the S&P 500 that offer a yield that exceeds 6% and have their dividends be taxed as qualified. So investors looking for high income at a lower tax rate can also really benefit from holding preferred shares of a company. But again, that only applies for the non-pass-through entity companies. Another advantage to preferred shares is that they're often less volatile than their common stock. So for those looking for a steadier investment with a regular dividend, this is another big benefit to being a shareholder of preferred stocks. But at the same time though, there are some disadvantages to being a preferred shareholder as opposed to being a common shareholder. Preferred holders don't get to participate in the potential share price growth and dividend increases of the common stock. While the share price of their common stock might get to experience some share price growth and dividend increases, preferred shareholders won't see their dividends or their share prices grow accordingly. You also don't get any voting rights if that's something that you happen to care about, and another problem that you might run into is that some preferred stocks are very thinly traded. While the common stock of a company can have hundreds of thousands or even millions of shares trade in a single day, most preferred shares don't see anywhere close to this kind of trading volume. If you accumulate a very large amount of shares in one particular preferred stock, you could run into the trouble of not being able to find enough buyers for it if you need to sell your shares in a hurry. They say that if you own too many shares of a thinly traded stock, then the stock owns you, because it might take a long time to find buyers if you happen to build up a very large position in a thinly traded stock and you need to dump all of your shares quickly. The easiest way to prevent this from happening is by investing in a preferred stock ETF or a closed-end fund. It's a convenient way to hold a lot of different preferred stocks without having to research and selecting the best options. Plus, unlike most preferred stocks themselves, some of these funds do pay their dividends monthly. Because these funds trade at much higher volumes, you don't have to be concerned about owning too many shares of one. One that I've talked about in the past because it's one of the best in my opinion is PFFA, which is the InfraCap US Preferred Stock ETF. This fund holds preferred shares of companies that have a market cap of over $100 million. Its dividends are going to be a mixture of qualified and ordinary income, and it also pays monthly dividends. Just like the whole market, preferred shares fell during the pandemic before eventually recovering to their par value. But then also like the bond market starting in early 2022, many preferred shares and preferred ETFs have been struggling. But before that, and what'll happen after interest rates start going back down, then the share price will recover and will continue to be very stable. Right now this ETF is offering a monthly dividend that's exceeding 10%. Another option that exists is the Van Eck Preferred Securities X Financials ETF, which is ticker symbol PFXF. This fund focuses on exchange-traded hybrid debt, preferred stock, and convertible preferred stock issued by non-financial corporations. Although its dividend isn't as consistent as PFFA's and it does have a lower yield, it does have a much lower expense ratio. Plus, according to their website, it looks like a decent portion of their monthly dividends are going to be qualified dividends. It looks like last year about 26% of their total dividends were classified as qualified, so it would save you a decent amount in taxes. PFXF also has a longer track record of performance to look at as it's been listed since 2012. One comment I see people make from time to time is that they think that preferred stocks are better alternatives to savings accounts. While they're unquestionably less volatile than other publicly listed investments, I don't believe people should view them in this way. It is true that the share price of many preferred stocks can remain very stable for long periods of time, and they offer higher dividend yields than a savings account. Plus, if it's taxed as qualified dividends, that means it's better than interest earned from a bank since that interest is taxed as income. But it needs to be understood that these investments still do come with risk. Companies can still experience hard times and temporarily suspend their preferred stocks' dividends. Companies also go bankrupt, obviously, which would make your preferred shares worthless if there weren't enough assets to cover the preferred shareholders. Ultimately, preferred stocks are still great investments for those seeking stable and consistent income. They can be a worthwhile investment alongside other higher-yielding holdings including BDCs, closed-end funds, and covered call funds. Despite there still being some risk, they're most ideal for investors who are either retired, a lot more risk-averse, or if you have money sitting around on the sidelines that you know you won't need for a while. In some scenarios, such as the case with Oxford Square Capital, the preferred shares I think are a lot more appealing than the common shares, given the track record of their common shares. Preferred stocks are often the most overlooked investment by investors, but they still offer really high yields and provide safer returns. And with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.